Again.
Yes, I'm here.
Hi there, yes, I'm here. I'm here.
Fundraising. Good afternoon, everyone. Thank you very much for joining us. This is Startup Fundraising Q&A. It's our 165th session. We've been doing these for almost 5 years now, where over 200, or rather than over, at least around 290,000 people have joined us so far. And we've answered about 3,000 questions from founders. None of that would have been possible without people like Avon, Hannum, Oscar, and Dan. So if you lovely panelists would like to drop your LinkedIn URLs in the chat, hopefully people will want to follow you and reach out if they need anything extra. In the meantime, what we can do is try and help some people today. You see, unfortunately, over 90% of startups fail. And the top 3 reasons for that are 1, market fit, 2, running out of money, and 3, not having the right people. So when it comes down to it, that running out of money is what we're here for today. Most of us will run out of money at one point or another. And in order to take our business to the next stage, we will definitely need to raise funding. Hopefully, we'll be able to help you with some of that today. And in terms of questions, there are no wrong questions, and there's no need to be shy. It's a learning curve for us all. We are going to go into some introductions. Then I'll be asking my panel for their do and don't when it comes to early stage fundraising. And then we'll be asking them some questions that you well, that you want to really. In terms of what kind of questions, they can be on anything to do with fundraising, maybe about when's the right time to reach out to an investor, or perhaps first and foremost, to decide whether you need to raise money, whether you should go to an investor, an angel, or a VC, or perhaps a crowd fund, or even a bank for that matter, or perhaps if you should look for a grant, how much you should ask for, when's the right time, how do you do a pitch deck? Or perhaps you want to know about certain terms that somebody has offered you and you're not quite sure how to go about it, and all that jazz. For those of you that are on the live streams, please bear in mind that unfortunately we're unable to monitor your questions there live. So if you do want to ask us anything, you'll have to join us here on Microsoft Teams. It's audio only, which means you can tune in from anywhere via any platform or device. Quickest way to do that, I guess, it's to go onto our website, startuptoscaleup.club. Again, it's startuptoscaleup.club. When you go there, just scroll down a little bit, you'll find today's session, which is Startup Fundraising Q&A 165. You click join. It's a quick registration on Luma. That will then send you onto our Luma page where you can see the actual link for today's call, and then simply join, drop your question in the chat, and then you can fire away with your question. Speaking of questions in the chat, there's a chap that has joined us a few times, and yesterday he also joined us, but he mentioned he couldn't join us today, so he sent me quite a lengthy question and explanation on his business. I'll put that in the chat now. So as we do our introductions and do's and don'ts, maybe if the team can have a look at this. Well, it's a novel rather than a question. It's quite a lengthy one, but hopefully that will provide some meat. If your questions today are not on fundraising, please save them for the other conversations we run. Currently, we are helping startups. We're helping founders on Mondays with talent, Tuesdays with product and tech, Wednesdays with growth, Thursdays fundraising, as you can see today. Second Friday of each month is UK Startup Law, and third Friday of each month is UK Startup Finances. That's tomorrow. They're all from 12 to 1 p.m. UK time. You can RSVP to any of them via our site, startuptoscaleup.club. And again, they're all Microsoft Teams audio. Now, without further ado, my name's Anton Call. I'm an Albanian in London working with startups normally right after they get investments. I embed within their teams and help them hire and keep the right people. I also do some growth advisory work with a few other startups and some accelerators, as well as helping some angels and family offices with their due diligence and assessments. We'll start with the ladies of the house, so we'll go to Avon, then Hannah, then Oscar, and last but not least, Dan. Please take it away, team.
Good morning, good afternoon. Hi, I'm Avon Spizadenhout. I'm a South African living in London for many years. My background is in corporate finance advisory, initially with BDO when I first came to London, focused on VC and PE deals, and then moving into VC investing. My last role on the investing side was when I moved into sustainable investing with Earth Capital and became the CEO there. We exited there last year, and for the last year, I have been focused on working with venture-backed companies. I do board work, board advisory work, with a particular focus on female-led businesses as well. And I've also started to specialize in turnaround for venture capital-backed companies.
Hi, I'm Hanim Dogan Jane. I am an exited tech founder turned angel investor and board advisor. My sweet spot is actually female founders and obviously tech. And I currently live in the UK, and I have lived in about 10 countries around the world, and also in South Africa, my colleague here, which I recently moved from. Lovely to be here, Anton. Thanks again.
Good afternoon. My name's Oscar. I'm 37. I'm English and I live in London. I've spent the majority of my career, about 10 or 11 years, in consulting, both Accenture and Oliver Wyman. And then latterly, I've worked in a private equity roll-up in the gaming and edutainment space. And for the last 3-4 years, I've been in venture capital, running a 150 million pan-European fund. And in October 25, I left that to launch my own fund. So looking forward to the discussion.
Hi, I'm Dan Ballin, Chief Executive of Ideas Crucible. I'm an exited founder, multi-exited founder, and focusing mainly an angel investor, ex-CVC, board advisor to several VCs, also raised for a VC as well, incubator and LPGP fund. Capital raising, focusing mainly on B2B, deep tech, med tech, AI, cyber, working with a lot of science and engineering spin-outs. But we also do fintech and various other areas, less so on consumer, but we always break the rules occasionally. And yeah, pleasure to be here.
What an amazing team. Thank you very much to all 4 of you for joining us today. Right here, just a quick reset of the conversation then, whilst the team gets ready for their main do and don't. And please, team, don't use the same logic for both. This is Startup Fundraising Q&A. It's our 165th session, rather. And we're here to help founders with whatever questions you have on fundraising, whether you want to know about when's the right time to start raising, who should you go to? Is it a bank, a crowdfunding, an angel, a VC, a grant, or any other source? How do you do a pitch deck? How do you deal with valuations? What sort of term sheets you should go for, and how much you should ask for, and how do you go about asking, and all that jazz. There literally are no wrong questions, and there's no need to be shy. Again, another reminder, because I can see some messages on, out of all places, on Instagram. We are unable to monitor your questions live on those live streams, whether that's LinkedIn, YouTube, Facebook, or Instagram. So please do join us here on Microsoft Teams. Quickest way to do that is to go onto our website, startuptoscaleup.club. Again, the website is startuptoscaleup.club. You scroll down a little bit, and then you will see today's session, Startup Fundraising Q&A 165. Click join. It's a quick registration on Luma. There you'll find today's link, and through that you can join our audio only call, which means you can join us from anywhere, via any platform or device. Now, I did mention all that jazz. Unfortunately, we are not playing jazz. But maybe next time I can find a way to play that on the background. For now, how about some parting words? Let's start with the ladies again. Parting words? No, I meant do and don't. Sorry, one do and one don't when it comes to early stage fundraising. That is important to you, please, ladies. So let's start this time with Hannum, then Avent, and then Oscar, and last but not least, Dan. If we can take about a minute each, that would be great.
Thanks so much, Anton. Always a pleasure to be here in the Startup Q&A. So I'll start with the do's, as speaking from personal experience and being in this field, helping founders fundraise. I would actually suggest to look at the right investors and not just at the money. I know that sounds very straightforward, but and this is linked to my don't, because I do see too many founders starting to raise when the runway is too short or they're in desperately need. So obviously the ideal would be if your runway is like 18 months. And if it's really early stage, the question would be, why do you fundraise, and start from there, because money might not always be the solution. Fundraising. Thank you.
Hi, Evan here. I'd say my do is to be prepared. And this goes along with what Hannah was saying, like know who you're going to go to, know that, when you need to raise, how much you need to raise, have that done. But do your homework. And something I would really suggest is once you've got your pitch deck, whatever prepped, is get some, whether it's friends, family, colleagues, that you could do a bit of a test run on, and let them ask you the tough questions, present to them and get them to ask you the questions. So by the time you sit in front of a VC, you really are prepared. And going on to my don'ts, don't ever be less than honest with them. If you don't have the information, don't blag it. Say to them, look, I'll get back to you. I just want to confirm that. I'll come back to you. Don't give information that isn't true. Don't oversell what you haven't achieved with the business, because it will be found out and it will really discredit you in the eyes of that investor. So be realistic. Thanks.
Hello, and then from my perspective, I've got 3 do's. And the first one, which is a common misconception when raising from a venture, is do know your numbers. And what I mean by that is know your business plan incredibly well, know your cap table incredibly well, know things like your burn rate, know things like your growth rate, know your unit economics. There's a real misconception that you can raise in venture with a nice idea, a bit of an operational track record, and absolutely in this market you cannot. So really be completely quick off the tongue with all your numbers. It shows complete credibility, and certainly in funds that are more technical and more kind of numerate, if you do not know your numbers really well, you will not pass the first kind of conversation. I would say do show resilience, because fundraising right now is incredibly tough. And in terms of my previous fund, about 2% of companies would actually make the investment committee. So you will be told no an awful lot more than you are told yes. And then the final thing is do value the analysts and associates that you speak with. They are absolutely not the final decision maker, but they are the gatekeepers to the principals and the partners who will prepare the investment committee materials. So value your conversations with them and work equally as hard building credibility with them as the partners, because they are the people that will back you internally to make sure you get seen by the real decision makers.
I just want to second everything the three previous panelists have said. I think last time I was on the panel, I kind of compared raising to organizing a wedding. I'm going to probably try something different this time with my do's and don'ts and compare an investment raise to jazz, because it's not about improvisation and winging it. It has a key tempo at the end of the day. You're always playing to the beat at the end of the day, of that key rhythm at the end of the day. So understand your market, understand your plan at the end of the day. But sure, you have to improvise like jazz at the end of the day when the drummer shifts, and you've got to protect the feedback from the investors. And like good jazz players, you're listening as well as talking at the end of the day. But you've also got to be authentic. That's my big do as well at the end of the day. And that's what makes jazz so great, and it's what makes great startups really attractive to investors. But I guess like any startups, jazz has music, but that's a feature when it comes to being a startup. So your product should take that and embrace those mistakes and build it in at the end of the day. And timing is everything, just like music. And that's one really important. So don't go out until you're ready at the end of the day. And continually iterating, because just like jazz, you're always practicing, you're always improving, continually improving yourself and capture feedback at the end of the day.
Thank you very much. And I think in the words of Ada Lovelace, the best music is made out of numbers. Right here, we now have 22 minutes to go. I have just made Joe, well, I've unmuted you, Joe. Are you audible? Can you hear us? Let's check again. So Joe asked a question in the chat. Can you hear us, Joe? Right. I'll do a quick reset of the conversation, and then hopefully Joe will be audible. So this is Startup Fundraising Q&A. We're now going to move on to some questions. We just had some do's and don'ts and introductions. In terms of questions, they can be on anything to do with fundraising in order to take your business to the next stage. We've got some brilliant people, investors and advisors who've been there and done it on both sides of the table, both invested but also for their own businesses. So please don't feel bad about or silly about any questions you may want to ask, because there are no wrong questions. Just a reminder, if you're on the live streams, we can't monitor your questions there, so you'll have to join us here on Microsoft Teams. Quickest way to do that is to go onto our website, startuptoscaleup.club. Again, the website, it's startuptoscaleup.club. Scroll down a little bit, you'll find today's session, which is Startup Fundraising Q&A 165. Click join, quick registration. That gets you to Luma. Via Luma, then you'll be able to find the link for our Teams call. And by the way, being what's it called? Being audio only, it means that you can tune in from anywhere via any platform or device. Now, Joe, are you able to talk now? Right. If you're not able to talk,
Joe's looking like he's on mute.
well, I've literally unmuted him, and where is he? Yeah, I've unmuted you. Tell you what, Joe, let me make you a presenter. Let's hope that works best for you. Can you hear me now? There's something wrong. Well, wrong. Something not working with your device, whatever that is, because for everyone else, it's working fine. If you want to try and come back in, Joe, we can maybe give that a try. So just kind of exit the call and then come back in. In the meantime, I will, maybe we can go to another question that was sent in to us. Where is it? There you go. This is quite a long one, but basically it's a funding request. So they've got an innovation in terms of helping operation surgeries, doctors, when they perform surgeries, to use basically pre-surgical skin preparation. And he explains how they've got quite a brilliant invention there, and also that he's looking for funding. I don't know if the panelists had a chance to go through the question, because it's quite a long one and I don't want to read the whole thing here. Did you have a chance to go through it, team?
Yes.
I think some of us have, because I can see some comments from a few of us.
Brilliant.
It sounds a super exciting area. I mean,
It is.
fundamentally,
Well,
the whole raise.
how about this then? Let's start with Oscar, then Dan, then Avens, and last but not least, Hannam. If we can take about a minute each on what advice you'd have for Vinny, he will be listening onto at least the recording, but maybe if he can catch it once he's in a meeting, he also said that he'll try to tune in live just to listen to it. So, Oscar, did you get a chance to read it?
I've skim read it, and it says project total cost 4.5 million, shortfall 30k. So I would read that as they've raised 4.47 million.
Something, yeah.
Yeah, it really, and
or
if you
even bootstrap, God knows.
It's not very clear. Or is the point that they have a 30k raise? And if it's a 30k raise, this is absolutely not a venture round. It's a friends and family. This is probably one individual who you may know personally, rather than kind of VC per se.
I don't mean to interrupt, but I don't think he sounded like he'd already raised almost 4.5 mil based on the question, at least yesterday, and what he's put there. So I think you're right on the second part. Sorry.
Okay. And then in terms of the brief, those are 30k is required to complete essential work packages and unlock access to grant funding. That's pretty vague in terms of the use of the funds. But I'd also say that there's no indication here of commercial traction. Is there any commercial traction? are there any orders? Are there any clients? Is there kind of contracts on the table? So it's very hard for an investor.
I doubt there's any of that.
There's none of that?
Yeah, no. He mentioned that he was working with one of the university hospitals, if I'm not mistaken. And they've got prototypes and all that, but nothing in terms of commercials yet.
Okay, so if it's 30K, I would do angel investors that ideally have some understanding of the medical world. You could pitch this even to kind of local doctor surgeries, or you could pitch this to people in the industry. You could find them via Perplexity search in your local area who might find this interesting. You may even be able to find individuals within your university network at Oxford or at Bath who have, you know, a spare 30K that they might want to invest. But that is where I would, that's where I'd advise you, because 30K is not a huge amount and it's definitely not a venture play, but best of luck with it. And we're interested to hear what the others have to say.
Yeah, that's an interesting one. Going to the doctors who understand this best. That's a good one. Dan?
Yeah, I concur with everything Oscar said. And if they're at TLR3, they're just at concept stage at the end of the day. So, I mean, going to an angel investor just doesn't make any sense to me, because they're not interested in investing in R&D at the end of the day. They're invested in sales and marketing. So, and an angel investor is probably just going to think, you know, I'm going to get diluted out like there's no tomorrow at the end of the day, because, you know, someone's going to come in with a big VC at some point when they're at TRL 5 or 6 or something, and my equity is just going to get diluted to nothing. So you might as well go for a larger raise, to be honest, given you're in the science and engineering space. That would be my advice. Don't mess around 30K here and there. It's just not worth it. And if you're in this kind of med tech space, I'd consider going for some of the Innovate UK grants and everything else. The fact it's described as a work package makes it sound a little bit more academic than the usual kind of VC entrepreneurial opportunity. So yeah, I think they're really, you know, they seem to be in very small bite-sized chunks, and I think they need some advice on how they can maybe package that up into slightly chunkier rounds at the end of the day, giving them, as opposed to just going from one task to another. That would be my advice.
Evan, thank you, Dan.
Yeah, I mean, really not too much more to add there. You know, I think at 30K, it really is just to friends and family. If they can get it to that next phase and then they're ready for angel investors, it sounds like the kind of thing. There are a few angel groups around with a particular focus on med tech, and they should be going through those ones where they can get not just money, but actually good contacts and good advice from people that know the sector well, because it feels very specialist. But really at the 30K is, if that's what they need right now, then that's what they need right now, but that's not on the open market. That's a friends and family.
Yes, Anton, I do not have so much to add to. I find it a little bit strange that, you know, the big raise is 4 million. Why do you want to raise to 30K? I don't get that really.
That's to go to the next stage so that they can apply for Innovate UK grants, Horizon grants, and various others.
Right.
So if once you have a certain proof of POC sort of proved and whatever admitted or backed or however it works, I'm not 100% sure how the granting scheme works, but you need like a professional body like a university or a college hospital and stuff like that, I believe. Once you have that, then you can apply for higher tranches, if that makes sense. So that's how I'm understanding this.
Okay. Yeah, no, I have some founders I work with in this space. So I mean, and the normal way to go about is actually to, even if it's that 30K, to get a grant for that. So that would be my recommendation.
Thank you very much to you, team. Vinay, whether you're listening via the live streams now or if you listen to the recording later, my advice, first and foremost, come next week live, so that, you know, whoever's on next week can ask you questions and go through this. In terms of what to do right now, some of the advice here was brilliant in terms of going to angels that are in the field, or even family and friends. In terms of people in the field, what I would actually go to is directors of private clinics. If you can find even one of those people that cater or have to deal with what you're working on, guess what? You're getting money, you're getting connections, you're getting knowledge, and most importantly, you're also very likely to get your first contract from that. And with that, you can then go to whoever you apply under for grants or other investments later on. You can say that we've got a client ready. And the more of those you have, in a much better position to raise you'll be. So that would be my advice. Let's see, Joe, are you audible now? Let's check if Joe is audible. If it's not, okay, let me make you, sorry, let me allow the mic. Righty-o. Can you hear us now, Joe? It's weird. That is really weird. Let me make you a presenter instead then. Right, something's not right with your device, Joe. Oh, yep, here we go.
Yeah.
Joe?
Can you hear me? Oh, yes.
Oh, yes, rock and roll. Right. Quick introduction, please, Joe, because we've got some other people as well that want to ask questions. Quick introduction. Tell us about your business and what you're looking for.
Yeah, so my name is Joseph, and I do a condiments and drink business, basically. So I was just looking for funding for about 50K in regards to getting equipment, because at the moment I'm trying to scale up, and you know, I've been getting inundated with orders, so I would like to get some equipment to actually, fulfill those requirements. So I've been looking around for investments, and I went on angel investments, but it seems like they would want a fee for me and to look for investors for me. So I was just wondering if there's any straightforward way to actually getting investments, basically.
Do they want a fee up front from you to look for investments?
Yes, and yes.
Stay the F away from those people.
Yes.
Right, Joseph, can you tell me what is it that you're working on in terms of what your drinks and food is? Can you give us in less than a minute?
It's just so basically I make 2-in-1 condiments that double up as marinades as well as dipping sauces. And on the drink side, they're all organic drinks made with like real ginger, real sorrel. So that's pretty much it in a nutshell. So
okay, and why? And you said you need the money to what? Why do you need that money?
So basically, I've scaled up and done cans, but people prefer the bottles, because they're still cancer carbonated.
How long have you been doing this, Joseph?
Since March. So I've managed to get into a few shops.
Sorry, I can see there's a few other people that are unmuted. Please mute, because you're creating quite a bit of noise and echo. Please mute yourselves if you're not talking. Right. So since March, have you got any orders? Have you made any sales?
Yes, I've made sales. So I've managed to get into a few shops like Budgeons and mostly online.
Amazing.
Yes.
What have you thought about raising a loan?
I've approached a few banks, but not so lucky. So in that sense.
Why not, Joseph?
Because some want guarantors and stuff. Because I'm asking for like 50K. They're asking for guarantors, and I don't have any guarantors.
How about this? Can I ask you who you bank with?
Halifax.
Halifax. Is that your business bank or personal bank?
Personal bank. My business bank is Monzo.
Okay, business bank is Monzo. Okay, yeah. Does Monzo do finance, invoice financing?
Yes.
All right. Have you thought about that?
No, that's you've just introduced that to my
Good one. I would look at invoice financing, and I would look at some other means, maybe try and get, especially the budgets and so on. Literally be upfront about it with them and say, look, can I find a way to get some money for the orders that you pay upfront, so that we can speed this up. Just find an angle that works for them, basically. It's not always going to work.
Okay.
But if it does, then it's a good idea. On the other hand, what I would do is I would go, so you're based in Croydon.
Yes.
Go to the City of London. There's like a service and research base. You can research for free there on databases like Bowhurst. Go there, have a look at companies that have exited in the last 2 to 3 years that were in food and drinks and all that stuff. Look into that, see who those people, those angel investors are, maybe even who the founders that exited are, and reach out to them. That's one.
Okay.
And two, reach out to me on LinkedIn. I know at least a couple of food and drinks VCs. You might be too early for them, but maybe at least one of them might be willing to have a chat and give you some advice on that. With that in mind, I'll go now to Hannum, Dan, Avens, and Oscar. 1 minute each. If you've got any advice for Joe on this, please, for Joseph.
Yes.
Yeah, sounds very exciting, and looks like you actually got traction, and it's time to build on that. I would ask you to relook at the amount, 50K. What I said earlier is really important, that you not, as a founder, constantly raise and raise. Look at your run rate. How far is that 50K going to take you? So maybe instead of 50, it might be 100 and 150, that you at least have like 18 months runway, so that you can start raising for the next one. So that would be the first topic that I would recommend you to look at. And then go out. There is different angel groups and syndicates. LinkedIn is an amazing tool. Don't just bombard people, but you have to do your homework first. Get a really good pitch deck, get your amount right, and also you also need to think about, it's not just like a one way taking money, but how's the return on investment going to look like for the investor? What are you able to give? So that in a nutshell. Thank you.
Hi, Joe. I might have missed the first 30 seconds because unfortunately, my builder called me. But so you're needing this for packaging, right?
Yes. So basically, I've got cans which I've started producing, but I want to do bottles and scale that up.
So I mean, are you going to be? I mean, this doesn't strike me as a venture capital angel investor kind of opportunity. It just strikes me as a class, a small but good entrepreneurial little business. I mean, to me, I think Anton's right. Invoice financing. If you've got shows, how much of the cans are you selling at the moment?
The cans, it varies. So
what's your monthly revenues?
About two grand, basically, roughly around about there.
So if you've got demonstrate to for a small invoice finance company that you've got a regular recurring income of 2K, and you're now this is going to improve it, or then you should be able to just use the future forecast, the past, to kind of to act as collateral for it. The other thing would be maybe to go to the British Business Bank, and where they've got like classic 25K director's loan where you pay whatever 6% and stuff. There's a few other business loans where you only start paying, it's less relevant for you, but you only start paying interest once you're profitable, but you already probably are profitable. But I mean, I'd just take that as a director's loan where it does mean you're liable, but you're already generating money and you just end up paying 6% at the end of the day. It's not suitable for grants. I think I saw any question in my view. This to me, you might get a friends and family kind of investor who wants to come in this. But if your business is doing so well at the moment, you don't give a slice of the pie away, just pay extra 5-6%. I think Anton's right. Just go to a regular bank and say, I want a loan. To me, how long have you been established, Joe?
Since March. I started trading in March.
So a lot of the loans, they tend to see you've been established for a year or so, but just to show that if you've already got products in the market out there, and assuming unless you've got bank debt, that don't make problems, then you should be able to get something like this. Don't complicate this with those angels and VCs, because it's fine if you're raising hundreds of thousands of pounds or millions. But at this stage, I would just get a small loan from somewhere.
You also have, that's a good point, Dan, the Startup Loans company, which is a government's sort of scheme that basically the government acts as your guarantor to banks. They do a lot of work like this, and it's worth looking into that, Joe.
I've put a link in the chat for the British Business Bank, for instance. They are very good at this.
Good call, Dan. Who did we say next? Either Avend or Oscar. I can't remember which one we said first, but either of you, please feel free to go.
So hi there, I am Joe. I just put a link in on the chat as well. I don't know if you've ever come across Young Foodies.
No. I'll check them
Okay,
out.
so I've checked that. So what that is, it's like a community. I mean, some of the brands that have come through there have been like Pippin Nuts and Candy Kittens, a Proper Corn, and it's basically just for startup food brands. So they also offer a consultancy services to young food brands to help them with different stuff. But you've got founders that have exited successful brands that could help. You've also, they have networking events for founders of new startup food companies to network with each other and to get introduction. These people that can help. So I think it might be worth a start there. And I think they can also kind of advise on access to funding and stuff. So it might be a really good network to join.
Thank you, Avend. Last but not least, Oscar, please.
Hi there. So first topic is the fee for investment advice or introduction. So yes, it's painful, but it's very standard practice, whether you are looking to raise 100K or whether you're looking to raise a 5 billion fund. You know, there are companies called placement agents where this is a whole industry where they take 50 basis points or whatever it is to help people fundraise. It's a whole industry. So I think to avoid it is preferential for sure. But if you're to avoid it, it requires big hustle on your side and you steam up for that. So if it's going to be on your shoulders, you will avoid fees. If you do want an advisor or you do want doors opened, you know, it's fairly typical there'll be a cost for that. The next thing I would say is that it's great you've got revenue, and 50K is I would argue 50K raise, that is not ambitious enough. That is not an ambitious founder coming to the table saying, I want to build a market leading consumer business. Here's my plan. Here's my thesis. Here are my buyers. Like, again, 50K is a small round. It's a personal business. It's not going to be interesting for venture. But if you do think you can build a $100 million business, for example, there are absolutely several very strong consumer VCs in London. I can list Jam Jar, Felix Capital, Local Globe, Octopus Ventures does consumer, Kindred does it, Hoxton Ventures does consumer. So there's a very kind of active list of consumer venture capitalists in London. But if you are only looking, I'd say $500,000 type raise, I would reach out to those directly, and they won't charge you a penny for the reach out. And if they like you, they'll give you a call, they'll give you advice. But if it's going to be the 50K, I would just stick to friends and family.
Thank you
very much, Oscar. Oscar, just one thing I wanted to touch on. You mentioned the founders' fees, the advisors that do. Totally agree with you. There's a ton of those. It is painful, but you know, often they work. My comment was that the ones that ask you to pay up front, in my experience, it's not the best way to go about that. Is that your view as well, or
it's not preferable? I mean, all these conversations should be outcome based. So it's
exactly.
It's much more comfortable to give an advisor a bigger share of the upside if it works. And I think small companies are going to struggle with cash flow on kind of retainer type topics, but sometimes you don't have a choice. And I would also say that when you're pitching, you know, whether it's an LP or whether it's a fund, they are buying you, you know, Joe, they are buying you. Like all these startups, it's all about the founder and the founder team and the credibility of that founder and his team or her team. They are buying you, Joe. They are not buying an advisor who makes a snazzy deck and refines your story in inverted commas.
Okay, yeah, I get you.
Spot on, and I'll go.
Maybe if I can come in there, Anton, just as I also have a placement business as well. I mean, which does very well. We don't charge anything in advance. We're success orientated, at least. But there's placement companies. There's some really good ones out there, and they're used a lot. There's plenty of equally so that you've got to be careful of. So when you're speaking to a placement company, ask them to maybe introduce you to some of their some of the companies they invested in. At the end of the day, look at their own personal track record. Maybe they've practiced and exited at their own business at the end of the day. Really get to understand, speak to some of the startups that they've worked with as clients, because the good placements companies will probably be kept on to manage multiple rounds at the end of the day. So
absolutely.
Do your interview them like you would interview, and don't be afraid to put their feet to the fire.
Yeah, can I just jump in there quickly? It's Evan here. I think as well, I fully agree that there are good ones and there are not so good ones, right? The problem as well when you're raising 50,000 is the amount of work that those guys are going to have to do is the same for 50,000 as it might be for 2 or 3 million. The
Totally.
problem is that if they're looking at a percentage of the as a success fee, for them to make a living out of raising 50K is pretty hard, and they're going to have to put in a lot of work to do it.
Absolutely spot on. That is brilliant. Thank you very much for that, Joe. Last but not least, something worth looking into is do the research. Oscar mentioned a few good names that are in this line of work, but you may want to look at accelerators and investors who've invested in companies that do sustainable packaging, right? And if a company has managed to get a considerable investment, you might be able to strike a deal with them so that you don't have to pay right now upfront until you've managed to get some money from, let's say, the budgets or whoever you have out there. There may be a way you can work out a deal and maybe even get some investment out of that. But nevertheless, feel free to reach out to me on LinkedIn. I'm happy to have a 20-minute call for free and see if I can point you in other directions as well.
Oh, that's brilliant. Thank you.
And best of luck. Righty. We now have another question. I hope I'm pronouncing this right. Is it Halidonto? Or Halidonto, rather. Halidonto, can you hear me? I have unmuted you. Where are you? Tell you what, let me make you a presenter. That might help. Right. Do you want to try and unmute now? Click your mic, whether... Oh dear. Right. If it doesn't work, here we go. I'm not muted. Okay, so do you want to try and speak? Do you want to see if we can hear you? Because I have literally just made you a presenter. Strange. Maybe try and do what Joseph did and leave the conversation and come back in. Hopefully that would work.
He's looking like he's unmuted now, actually. Just unmuted.
That's very strange. Yep, go on, Alidonto. I can see muting and unmuting. You don't want to turn on your camera, though.
Turned on his camera, but his microphone's not working. We want his microphone working and his camera off.
Jeez. Right, how about this? Once you're working that out, let's go on to a question that was sent in to us. And then hopefully you'll be audible. Where is it? Okay, copy, paste.
Hello.
Yes, we can hear you now. Woo! quick introduction. Tell us about you and your business, and then go ahead with your question.
Hi, my name's Halidonto. I'm the founder of Androidica. Androidica's vision is about the future of work and about how to teach people from working class, neurodivergent and disabled backgrounds opera and blockchain. Androidica reimagines opera and performance for the digital age. It brings together metaverse learning, immersive technologies, gamification, and blockchain and Web3 tools and inclusive design to create new spaces where artists can learn, collaborate, and perform. We've been developing a framework where digital opera lives and live performance and community participation coexist, blending education, creation, and ownership into what I call the imagination economy. Androidica isn't just another platform, it's an evolving ecosystem where physical and digital performance worlds meet. We were recently awarded Innovate UK grant money last year for 50k, so we've completed that now, so we have an MVP, and we're en route to market and looking to raise between 500k and above and more.
Very good. Well done on that, Alan Donton. Can I ask you, in terms of monetization, where are you focused on and how far are you from that?
Well, we are, we just finished the MVP, so now we're just trying to build that infrastructure. So monetization is quite close, but we're needing to actually put the investment in to build the platforms, because there's Androidica split into 3 things. So there's a metaverse learning lab.
So how are you going to make your money? What is the business model here, as Dan put in the chat?
Well, the business model is quite complicated. It's not just a simplified thing, because you have DAO structures and selling performances within the metaverse. So you're kind of similar if you look at things like Fortnite. So you could be selling digital assets, real world assets, tickets, performances, and also training, but also having things called DAOs. I don't know if you're familiar with what a DAO is within blockchain. So that kind of creates a circular economy. So it's about blending the 3 of these together, and then obviously having an extended network to invite organizations in, say like the Royal Opera House, the technology companies, etc.
I hear. All right, thank you very much for that. 2 things. Number 1, next week we've got somebody who's quite well known in the metaverse. Fabio Lafranca is on the panel. You might want to join us, and hopefully he'll have some pointers. For now, I would look at 3 things, Alidonto. Yep. Number 1, go back to Innovate UK. You probably might have come across somebody called Asha Easton.
Yeah, I know. I've to be honest, I've already tried to contact her. She's not been very good, in my humble opinion. So I'm looking towards Dubai, to be honest, because I don't see any money here.
I hear you. I'm sorry to hear that. I've got a very good experience with Asha, and she tends to be quite helpful onto the ecosystem. But I hear that.
I'm not saying she's a bad person. I've just not had a good run, and So.
No. That's fine. Don't worry about it. What I would do is Innovate UK. Honestly, it's the best policy, Alidonto. Don't worry about that. Innovate UK has got a program where they have certain partnerships with investors. You can find that list of investors. And what I would do is go and look at that list, see which one of those people invests in the metaverse, and then go back and say, look, I've raised this much from Innovate UK. I've seen you on that list of partners, and I'd love a chat with you about where to go next. One of the earliest things I've learned when exposed to the investment world was that if you ask an investor for money, you may get advice. And if you ask for advice, you may even end up getting money. So I definitely would look at that. Number 2, I would look at accelerators. Because of where blockchain and metaverse is at the moment, it's a bit like Marmite. So not everybody has got an appetite for it, but the ones that do might be willing to open quite a few doors for you. So definitely look at the accelerators. And last but not least, you're right, maybe Middle East and Singapore and Hong Kong might be a good call. But again, it's a bit like the Wild West, because I see a lot of people now flood into those areas, and they read somewhere that somebody has succeeded and so on. But actually, the absolute majority have really suffered badly. But that's the case anywhere you go, right? So I'm not slagging off the Middle East on.
No, I understand.
It's just that there's a lot of bad actors, and the thing is, when you are in a completely new territory that you have no connections and no ideas, then it's easier to fall prey to bad actors than it would be somewhere where you know where you stand, right? So personally, again, that's what I would look at. And also feel free to join us next Thursday with Fabio Lafranca, because I think he might be able to give you much better pointers than me. But let's now hear it from the team. So, okay, let's see. I think we've lost Hannum. She did say she's leaving at 12:45. So maybe we can start with Avens, Oscar, and then Dan, please. Any thoughts on this?
Yeah, I mean, obviously the fact that you got that 50K, that should, and that was that via Innovate UK.
Yes, we won the
Yeah.
Catalyst Award, yeah.
It's really in their interest to keep supporting you and show that the companies that get those grants go on to succeed. So it really is in their interest, because I feel like they will ultimately be getting judged on, what happened to those companies. So lean on them and use them, because they're already committed to your business. So whatever you can get out of them. There are things like what used to be Creative England is now Creative UK. Are you in touch with them?
Yeah, I'm in touch with multiple people, because I'm in touch with the government as well. Do you know what I mean? Because this is actually bringing people into employment and creating jobs. You know what I mean? This is what this is about.
Absolutely.
So the whole point is, because 0.1% of people in Britain from working class and neurodivergent areas, right, are not employed in the arts, but Britain brings in 8 billion a year, but there's no jobs in the arts. So the whole point of what Minds is the antithesis to these institutions, because they don't work. So it has to come from different kinds of funding. And to be frank with you in this way, Innovate UK haven't been that great. Right? They don't. For people who are meant to be innovation, they're not risk averse, and they're a bit dubious around things they don't understand. So there's only one person who's a blockchain specialist who completely understood what I was talking about. And of the people I'm talking to, it's like getting me to raise 8K, 1K. That's not sustainable to me. I'm a working class artist who's like jumping about trying to build a business like this, right? And I've got a 90-page report that the government have read, and they've like, everything I predicted is in my report. Do you know what I mean? So I'm right now where I'm at MVP, and monetization will come once it has marketing. In order for me, everything is there. It needs the money invested in it to get it there to be marketed, and to say, like, this is actually about the future of work. If you think about AI, now we need human-centered creativity. This is the imagination economy we're stepping into. So, like, we have to start thinking about what is the creative economy in Britain, because it isn't serving the people who should be working it, in my opinion. And there's a lot. I can't survive on 8K, 5K. I need about 500 to 5 million, right, to get it going, because all the accessibility stuff is not just tokenism. It has to be baked in from the beginning, and that costs money. That costs a lot of money.
Alidonto, sorry to interrupt, Avens. Alidonto, there's something that is quite important in terms of how Innovate UK is meant to operate. And that is two things that it is worth noting. Number one, unfortunately, Metaverse hasn't had the great. Sorry, can I please finish? Hasn't had the greatest success in terms of monetization. That's one. And two, the way Innovate UK is governed, they are told, especially because they have to go in front of MPs all the time, they are told to invest in ideas and R&D and innovation that will bring in money. If you don't have a very clear and succinct business model, they are going to struggle, because what they're trying to do here, and I get what you're saying, but what they're trying to do here, they're trying to act like a institutional investor, like a VC, whereby if I'm investing in you, I want to know how can I make, 33 times X in 5 to 10 years. And if that is not clear, that's where they struggle. Does that make sense?
Yeah, it makes complete sense. But to add, my CEO is, who's the financial model builder, is a strategist for HSBC. So we do have a financial model. I wasn't sure when I was coming on this call. I wasn't sure when I was coming on this call I had to talk about my financial model, because I'm a bit cagey about speaking about it, because it's IP that I don't really want to talk about unless you have a conversation with me in private.
I hear.
So I'm being a bit tenuous about it. I'm not a way to describe my whole IP to people I don't know yet.
No, that's totally fine. One thing
Not
I've
gonna
learned,
happen.
don't worry about it. One thing I've learned is this: people that can steal your ideas, they haven't got a time to sit here and steal your idea. And
No.
people that have got the time, they haven't got the means to steal your idea. But all I can say is best of luck, and I hope you found what you're looking for, buddy. We've got 2 minutes to go. How about some parting words? Let's start with the lady of the house, Avent, and then Oscar, and last but not least, Dan, please.
Yeah, I think it's, you need to truly understand your product, your market, and your go-to-market strategy, and be able to sum that up for someone. So when you meet someone and you've got that time in front of them, what does your product do? Why are people going to want it? Who's going to want it? And what is the size of the market? Know that information. Know who's going to buy it, why they're going to buy it, who's going to pay for it, why are they going to pay for it, and how much are they going to pay for it? It's that kind of information. And can you sell it at a profit? Understand the fundamentals of what you are offering the market, because ultimately, whatever you're selling has to make economic sense. So,
yeah, absolutely.
If I can come in
good
here
luck.
as been in the blockchain space for a long time, and you've got to be a bit neurodivergent to work as a in my business, working with VCs at the end of the day. Innovate UK are great with neurodivergent people, and some really cracking blockchain companies that I've worked with in the past. But if you look at all the success stories, whether it be an Alchemy, Consensus, Solana Labs, Coinbase, they've all got the success stories have a clean, simple business model which you can articulate very well at the end of the day, whether that be a circle, a ripple, or a chain analysis at the end of the day. So have a look at your business model. If it's complicated, you've got to treat a blockchain company, whether you're doing a token raise or an equity raise, just like any other business. It has to have a clear narrative, a clear problem, a clear solution, a business model that you can explain quite straightforward with a clear forecast of what the revenue is going to be. I understood all the words you were saying when you're describing the problem as a person who's been in the crypto blockchain space, as a Solano judge and everything else. I still couldn't figure out what your business model was. And therefore, it just goes into the difficult to do box, basically. So make it so you could talk to your granny about it, as they say.
Thank you very much. And last but not least, Oscar, any parting words for us, buddy?
Yeah, I'd say to all the founders, really good luck. You got to show resilience. You're going to have more down days than up days. And I think on this point, on this blockchain example, I agree with a lot of what Dan said. But this feels like, there's an arts kind of council who have grants for this kind of project. There's Arts Council, Mayor of London has it. There are borough grants, creative enterprises, all have these grants. And if you're going to tie yourself to a social demographic, i.e. working class, and someone who's neurodivergent, you're heavily restricting the size of your market. So you're restricting how big you can get if you're just targeting these people. So it does make it quite hard for an investor, if you like, to jump on that, because venture capitalists are capitalist pigs and they want a 10 to 20x if they can, or they need to be able to believe that. So I would always say to all the founders, make it big, make it seductive, sell a big dream, and then you have a good chance.
Thank you very much. And just to pick on that, Oscar, less than 0.5% of the startups out there actually manage to raise VC money. And the VCs themselves, on average, they need 1 out of 33 investments in order to return the fund. They're not producing and printing this money themselves. They're going out there and hustling just as much, if not more, than most founders do to get that money. I'll give you an idea. We used to have a chap from a very reputable VC, perhaps the leading prop tech VC, at least in the UK, who said it in private, but then also in one of our Q&As, that in whichever fund, the last fund they had raised at that point, they had to speak to at least 6,000 people, LPs, limited partners, as they're called. These are the people that give money to VCs to build a fund. So 6,000 people to raise one fund. That's why when you go to a VC, It's not that they're evil, but they want to make their money. And it's simple as that. So that's why you've got to be able, with your numbers, you've got to be able to figure a way to pretty much convince them, or at least sell them on that dream, that within 5 to 10 years, which is normally at the moment seems to be that relationship length for each investment, that they'll get that 33x. If you can't do that, they're just going to move on. And you know, this isn't any indication on you personally of how bad or good you are as a person or as a business person. This is simply for them to look at businesses that they're going to make some serious money from. With that in mind, we are now 4 minutes over the line. Apologies to have kept you longer, panelists. Couple of quick things before my parting words. Number one, we run currently 6 regular sessions. Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursdays, as you saw today, fundraising. Second Friday of each month is UK startup law, and third Friday of each month is UK startup finances, which will be tomorrow at 12 o'clock. We also have some groups on WhatsApp where you can connect with fellow founders, investors, operators, of course, our brilliant panelists. And you can RSVP to any future session via our website, startuptoscaleup.club. Again, it's startuptoscaleup.club. And actually, when you go there, you'll also be able to find the WhatsApp link at the top and bottom of the site. There's a WhatsApp icon. You click on that, and you'll be able to join whichever group you want in our WhatsApp community. As far as my parting words are concerned, just remember the startup journey can be both exciting, but also quite challenging. So try to have some fun in the meantime and be kind to yourself as well as everyone else for that matter too. Otherwise, hopefully we'll see you tomorrow for Startup Finances. We've got some excellent financial directors and CFOs and accountants joining us. So thank you and God bless. Bye-bye for now.
Thank you. Bye.